We welcome everyone to the 1st of September. It's a brand new month. Thank you so much. It's good to have Ayodele Jebro of Afrinvest Securities on the show with us today. Good morning. Also on the program this morning, Frontier Africa report is Joshua Odebisi. Joshua is a banking analyst at Vectiva Capital. Thank you very much, both of you, for coming on the opening bell.
Thanks for having me.
Thank you. Thank you. We appreciate it. Let's check it through the final trading day of August, as it were. A bit mixed when you look at the South African market, a whopping 1.04%. This morning, the 1st of September, that is changing rapidly on the upside. The Kenyan market was 0.68%, smaller in size, but still on the trajectory that we saw late last week. Egyptian market started the week, the former week on Monday, 0.60%. Of course, the Egyptian stock market actually started the trading week on Sundays. The Ivorian market was bigger yesterday, 1.10%, a very big jump for this regional exchange. And of course, the Nigerian Stock Exchange, about 0.1% on the back of Lafarge, Boa Cement, and Dangote Cement making big gains, but the banks on the flip side of that. In the East African markets, the banks are waiting on the Central Bank of Kenya under Njoroge to decide on banks' dividend payment for 2020, if that will be allowed. Meantime, inflation in Uganda, headline figure up 0.3%. Food-related inflation, a whopping 1.2%, again due to the hard lockdown that they saw during the pandemic period. And the Rumuruti Solar Park project is now on hold because the Norwegian investment company Norfund says they're backing out of these 6 billion shillings solar power projects, trying to unpack what went wrong between the parties. Nation Media is the largest media group in East Africa and in Kenya, headquartered. First half this year, cash and cash equivalent dipped 0.2% at about 2.8 billion year on year. The media group is now taking most of its content digital and going online, trying to cut some titles and decide to publish less newspapers. Meantime, Kenya's wildlife is reducing entry fees into the various parks and tourist centers to attract more tourists. Let's talk about Nigeria, where the big story has to do with the banks overnight. Naira recovers, GT Bank, UBA, Zenith, Stanbic says they are delayed earnings releases due to the regulator, the central bank, still using toothpick to comb through their books, as it were. Ghana is reopening for international flights today. That's good news, but the political problem in Mali is costing the country 80% stake, which has been sold over Anglo Gold Ashanti and Barrick Gold, two of the world's largest gold miners headquartered in South Africa. The mine is at Morila. And Goldman Sachs is bullish on oil, 44.5 for Brent this year, Q4, and 59.4 average Brent price for 2021. Joshua, let's come in straight, go to the banking sector. I'm sure that's the word on everybody's lips.
Absolutely, Wilson. Yes. So this is a little bit of a strange one for us, because we were expecting that the banks would release results any day. As the month was coming to a close, we were getting a little bit anxious, and I think investors too were getting anxious. And so when we saw those press releases yesterday on the NSE website, I think some investors just took that as the final straw and started to leave the market, because their fear is that when it's delayed, it can only be bad news. But I don't think that we need to speculate in that direction, because from the few unaudited results that we saw, we saw fairly positive results, and so we don't believe that the bigger banks, the more efficient banks, won't be able to achieve at least comparable results, if not better results. But it's still more likely to be positive. Now, as for the reason why the CBN has continued to delay approval of these results, I don't know what the reason may be. It might just be down to a new auditing protocol. It might have, I'd rather not completely speculate on the reason why, because if there was going to be any delay, I think, and it was bad news, it would come more from the banks than from the regulator,
Yeah, but when we look at the banks that are yet to report, the top five are yet to report, but I think still among the tier two lenders, a few of them still have outstanding earnings, isn't it, Ayodele?
Yes, I think just a few of them, and we're surprised for those banks. They didn't even publish any notification that they are delaying their own results. But focus most times on the top banks, because when you look at in terms of they account for over 60 to 70% of total assets, total deposits, as well as even revenue. And so that gives more sense. So for most of the banks that were expecting their results, they are the major player in this market. And I can't agree more with Joshua on we can only draw a reference from the unaudited, though it's a management account, is unaudited, but we believe that some of the opportunities for the banks that we would see, it's for a lot of them FX, most of them have gone along in their FX, as well as the gains they've seen from the fixed income. We can see the direction of yield. So the capital gain from that is also significant enough to also boost their position. And we may also see some increase in their online charges. But by and large, we also, you also look at the report from the CBN, you can see that total credit increased significantly. You can have about 5.2% in May and about 7% in June. So despite the COVID-19 impact, we're seeing credit even increase. So it may be as a result of a lot of people that maybe had liquidity challenges, had to assess the opportunity to at least just borrow for now before they get stabilized, and that may also be another boost. But by and large, is until when we see the actual result that we're able to also confirm exactly how the banking sector is faring.
Another key issue that came off of the weekend to yesterday has to do with the central bank interventions in the FX market. Joshua, what's the thinking at Vertebra Capital on this latest development by the regulator?
Well, first of all, I think that this is a return to the kind of policy that we expect from a central bank, because the objective of a central bank really is to manage inflation and to also, manage interest rates. And so this is them directly managing the interest rates that banks are able to offer to customers, which is supposed to encourage those banks to then, turn around and give loans at a cheaper rate. Because the thinking is, if they are able to house consumer funds at a lower rate, they are able to borrow that money out, cheaper. So that's the objective here, and I think that it's a positive one. It's the kind of thinking we've been asking for from the CBN. However,
depositors want higher rates on savings account on their deposits.
Sure, but unfortunately, the market that we're in does not favor that. This is what you would call expansionary monetary policy. You have to, those same investors, if they are looking for cheaper for more interest rates, they will have to take the money out of their savings accounts and either invest, one way or another, or go into the money market, because that's where you get better rates relatively. So either way, it provides an incentive to both the banks to borrow more and to consumers who want higher rates for their money to go and seek, higher rates elsewhere. So the money just doesn't sit in the banks. But although we still have to remember that the CBN is still debiting these same banks quite heavily, so the amount of funds that they have to borrow out is still, very much throttled. Now, obviously, you would ask the CBN to, relax that somewhat in order to give the banks a bit more, space to work with and to cheapen their cost of funds. However, the CBN is still keeping an eye out on the on the FX market, so they won't want to release their hold on the CRR just yet. But I think that this is a very delicate balancing act, especially at this time. But it's still a positive move because it will make people, make a decision.
Very delicate balance. Ayodele, quick one. Do you think the central bank, do you think banks should pay dividend this year? The Kenyans are still trying to decide. Some jurisdictions in Europe have decided no dividend payout. How do you think we should play this out in our environment, in Nigerian environment this year?
Okay, thanks. I think Nigerian banks are well capitalized, and even if they are going to make a loss this year, which is impossible, they have very strong retained earnings. If you recall, I think about 3 or 4 years ago, First Bank made a loss, but they still paid final dividend from their retained earnings. So what they are paying out, when you look at it as a proportion of their retained earnings or even for their profit, this is just interim dividend. And they've also studied how investors react. So for most of investors in Nigeria, you would know that for most of them invest in stocks because of dividend. So knowing that nature from the investors, I think, and also to just boost some form of confidence. So even if the result is below analyst expectation, but with even the ability to pay dividend also send a very strong signal even to investors. So I'm looking at Nigerian banks. I think we are well capitalized, because if you also look at the way the Basel III Accord, the CAR requirement for the global banks about 8%, and for us still retaining the 15% for international bank and 16% for systemically important banks, it still shows that we are well capitalized, and the CBN is even already thinking ahead to see, because of the capital adequacy. If you look at the capital in dollar terms, that has gone down, and they're trying to see how they want to recapitalize. So we believe that it's a step in the right direction, and it will further boost investors' confidence.
I want Joshua to think about the Goldman Sachs bullish repricing of crude oil outlook, whether we should have some nice time, relax the chair, have some nice time in Abuja, hoping that all will be well in Q4 and next year. Quick one, but let's throw in the Southern African markets top headline stories for yesterday. Trade surplus, that's the story, $2.24 billion in July. Year to date, the South Africa was able to pull 95 billion rand in year-to-date trade surplus, although the July figure was lower than June, but that's still a massive figure. Export was up 6.1% month-on-month, and import finished at 8507 billion rand. Standard Chartered says it's contributing $300,000 for COVID-19 relief in South Africa, part of the bigger Standard Chartered $5 million support for COVID-19, globally speaking, which goes to the Red Cross, by the way. Zimbabwe is seeing a drought this year, and that has impacted its sales of tobacco, 23.52% decline, according to reports on Monday. And virus in South Africa's tourism paradise, the authorities are now looking to local tourists who are cash strapped, according to Reuters report, to come into the mix and help stop the collapse of the country's tourism industry, as tourists around the world are staying away due to coronavirus pandemic. Joshua, let's get back to the Goldman Sachs story. Are you bullish on these numbers as you've seen them from Goldman Sachs? Is that a good story for Nigeria? Can we take it to the bank?
Well, I mean, okay, so first of all, the thing is, okay, sure, Goldman Sachs usually in their outlooks are not the most bullish, but a 59.40 average for Brent in 2021, I would hardly call that a bullish stance. I think that we do expect a more concerted recovery in oil prices next year. So I'd actually say that 59.40 is probably on the lower end of the spectrum. We would hope that it would get into the $60 mark, or at least return to early 2020 levels before the pandemic and before the shutdown, or even pre that 2019 levels would be great for us. But at $60 per barrel, I think we're still, at least we're in the clear. We're a little bit more out of the woods. Our economy, the federal government will get more money from that, but it's not the most bullish of stances, and I don't think that this will change the way that Goldman Sachs values our currency. This 59.40 average, I'm sure they factored it into their pricing of the Nigerian naira at between 500 and 550 to the dollar. So I think they're still very much bearish on Africa and on Nigeria specifically, even if they're a little bit more positive on oil, as expected.
Interesting. Let's come back to the local Nigerian market. Ayodeji, where are we on the quite a few CPs on the ground right now? Take us through the fixed income space.
Okay. The fixed income space has remained very interesting. And with the new circular we saw yesterday from the CBN reducing interest rate on savings account to 1.25% from about 3.7%, we'll see more liquidity flow in the direction of the securities, and which would also further pressure rates. But we don't expect rates to go, especially for the shorter term instrument, to go lower than its current levels significantly. And like you rightly mentioned, we currently Dangote Cement commercial paper offer is on at 4% and 5% for the medium and long term instrument. So that for most of the corporates, we would see, as the economy also improves, we'll see for some of these corporates to see how they want to restructure their balance sheets, and also expansion. We're hoping to see more corporate bonds. That's also more long-term, and it's also good for some of these companies to lock in now. And if we're able to raise a 5-year instrument at 10-12%, we feel, depending on your rating, we feel that it's going to have very strong positive impact on their earnings, as long as the expansion also yield return. So activities will remain very strong within that space. Maturities that I say expecting is also runs into trillion before the end of the year, still at over 5 trillion. So that would also continue to pressure rates.
Okay, cool. Thank you. Let's take one quick snapshot at the Northern African market. We have about 2-3 minutes left to touch on one important story. Egypt has been able to sign a 2 billion conventional Islamic loan with about 7 regional and international banks to support the budget, finance the budget, support economic growth in the face of fluctuating global markets. Afreximbank also got a GCR affirmation of its A+ rating, as well as its $5 billion euro medium-term note program of A+. The outlook on this trade finance bank based in Cairo is stable. And Turkey's central bank has put pen to paper an MOU with the Libya Central Bank for cooperation, which also mirrors the relationship that Egypt is pursuing with Greece. A very quick one, Joshua. This is Egypt securing $2 billion in funding for budget support quickly from seven regional and international banks. What does this say about what Nigeria really needs to do? It looks like money is flowing towards Egypt.
And we know the exact reason for that, because those loans will come with conditions, and one of those conditions is free and loose monetary policy that does not have any hold or any control on your foreign exchange. And we know that this is the opposite of Nigeria's policy, which is why we're finding it far more difficult to have access to these loans, even though the CBN has done quite a lot to, really balance this out. And, they are resuming sales to BDC. So hopefully the exchange rates on the black market should come down. However, overall, I think that it's quite obvious to everyone who can see that we need if we are really serious about, a long-term recovery, this particular path is not viable. The truth is, we have to float the currency and bite the bullet somewhat. If you look at it, if we float the currency tomorrow, sure, it will spike up significantly, but that will see an influx of not just loans from the World Bank and IMF and all these other international and regional banks. However, it would also see an influx of investments, because investors will say that this is the true price of my dollar. So I can, my dollar can go further in this economy than it could have under the strict price controls of the CBN. And so that will encourage investors to come back into the market. It will boost, FDIs and also longer term investments, because they know that, so long as there's a little bit more price stability, they can keep their money safer and know that, the things that have happened in the past with the CBN, essentially keeping everyone in a queue right now to buy dollar will not happen again. When they need to get out, they will be able to exit, from the market.
Adedeji, what's your final word on this?
Yes, I think it's really very clear, and for some of us that will analyze daily, it really can be also painful that we know what we need to do. And for even our economy to grow, foreign direct investment is key. The multiplier effect is higher in terms of, you look at employment, and once you're able to generate more employment, insecurity, they work hand in hand, would reduce. And then before we now be able to attract more. So, and we have all these mineral resources, the raw materials. Value adding is what is also missing. If we're able to close our mind, attract a lot of foreign direct investors, and they're able to add value to our raw materials, there would also be a significant reduction in the demand for FX. Significantly, and that pressure will not, because if we don't solve that issue of reducing the demand for FX by producing in Nigeria, would every 2 years or 3 will always come to this level, that even for foreign investors, if you see the Bloomberg report that said Nigeria is the only country that has experienced capital control within 5 years. So for most investors, they were not expecting, they would have thought that would have learned from the lesson of 2016 and we wouldn't apply a lot of capital control. So the fear now is we've already chased away, if I put it that way, foreign direct investments. We are now living very bitter taste in the mouth of the foreign portfolio investors that provides that FX liquidity for us, because we feel that by the time CBN eventually supplies this dollar and they go and they leave the country, it may take them, they will have to think twice, and the incentive, it has to be very compelling for them to be able to come back and invest, because they don't know what will happen in the next 2 years if oil price dip again, because that's the anchor to the performance of our economy. So it's not, we can see that capital is available, but it will only go to where they feel it's well appreciated and when the environment also enables it. And we have the population that we always hold on to. The market is there, which is the market. Young population, which is the market. But we're only just supporting jobs in foreign countries by not attracting foreign direct investment to our country.
Ayodele Iyebo, thank you so much for your thoughts this morning. We really appreciate both of you. Joshua Adebisi, banking analyst at Betova Capital Management. Thank you, CEO and charter trader at Afrinvest Securities, Ayodele Iyebo. Thank you so much. Have a great day, both of you. We appreciate your time. We'll see you next time.